Welcome to Intrinsic Motivation from a Homie's Perspective podcast, where we meet experts from all walks of life to learn their intrinsic motivation so that they can share it with the world. What do we have in store today? Stay tuned
Good morning,
to find
good
out more.
evening, good afternoon, everybody out there in podcast land. You are in tune to another episode of Intrinsic Motivation from a Homie's Perspective. This is Hamza.
And I am David.
And we're going to take a little turn today in our podcast, but I do believe it is part of intrinsic motivation, because if we look at a linear best-case scenario, we live our lives, and then when we slide into home base, when we're old and elderly, we have life insurance that would take care of us. And in many cases, there was a recent settlement that was a big win for insurance companies and a big loss for policyholders. And fortunately for intrinsic motivation from a homie's perspective, we have the insurance doctor. He's going to talk about what it means to be an average policyholder, how we were affected by the COI settlement, and what we could do to protect ourselves. So without further ado, I'd like to welcome David Kottler to the podcast. Welcome, David.
Thank you for having me.
Yes,
absolutely. Yeah, thanks for being with us, David. And I thought it was really important to have you on because in a best-case scenario, we all can live to our ripe old age of 150. In many cases, that won't happen. And we would think that our life insurance that we have would have us covered for family members. In many cases, that isn't the case. So I'd like for you to talk a little bit about your background in life insurance, and we can dive right into the details.
Sure. And by the way, I know you might have been being a little facetious with 150, but a good friend of mine is actually part of a longevity institute. And today, how many people, take a guess, are over 100 years old today in the world?
In the world. A percentage?
No, just give me a number. It's a finite number of people that are over 100 years old.
Okay.
I'd
David,
say, yeah, how about over 100? I would say 50.
50 people.
Over 100, you would say 50? Wow, David.
Worldwide?
Healthy part of
Yeah.
Worldwide, yeah, maybe. Well, there's got to be somebody we don't know about. So if you say worldwide, I don't know.
I'm living in Florida, so you know.
Yeah.
Yeah.
David needs to hear some more intrinsic motivation if he thinks it's only 50. Okay, I'll take a stab at it, David.
Okay,
so there's this blue ocean theory, and they talk about the Mediterranean diet and all that. So I would say around 300 plus.
300 people?
On the low end.
I got good news for you guys, okay?
Oh, perfect.
There's 100,000 people today that are over 100 years old.
How many? 100,000?
100,000.
Wow. Well, we were way off.
Wait. I didn't get to the good news. What do you think is projected? How many people will be living over 100 years old 20 years from now?
Ooh. It's going to go up with the technology. So maybe 300,000. We're going to be robots.
Okay. 3.5 million. Going up 35 times is the projection.
Wow.
Okay.
And so that's, it's a pretty fascinating concept. And I think that certainly people, can and will live longer. And part of the reason for that huge increase projected is, the enormous amount of baby boomers that are now coming of age, that are very concerned about their health, and they do better things, and they, do a variety of things so that they are living longer, medicine is better, et cetera, et cetera. So when you talk about, will my life insurance be around when I'm not, I guess the question becomes even more important if you think about it. And as I was discussing with you, just briefly before, the definition of insurance is shifting the risk. It's sort of crazy, even when we're young. And most everybody's got car insurance, most everybody's got home insurance. But what is your most valuable asset? Is really your health and your future earning potential, for the rest of your life. And that's why it's so important, I think, for, we were talking about what age should you start being concerned about insurance. And if you want to, shift the risk to the insurance company, that even if there's a health change, you'll be able to have a permanent insurance policy in place. There are very inexpensive options to buy what we call term insurance, but you have to be very careful that it gives you the ability to convert it to a permanent policy at the end of the term for which you're buying it for, regardless of any health changes. So that is a way of shifting the risk on your continued good health, before that point when you can, quote unquote, afford permanent insurance.
Yeah, I want you to go.
Does that make sense? Does that make sense, Jimmy?
I mean, there's a lot of questions just in that, just to kind of look at it from a historical standpoint. And I was thinking about Social Security, and when it started, I think it was the late 30s, early 40s, and the life expectancy was 62. And because they didn't think the majority of people would reach that life expectancy. And so now you're talking about 3.5 million that'll live to be over 100 years old.
Right.
You would think for insurance companies, they don't want a lot of payouts. So what could they do to kind of mitigate their risk as well?
Well, one thing I can share with you as I chuckle is you don't have to worry about the insurance companies, because guess what? They're a few steps ahead of the consumers. As a matter of fact, if you think about it, have you ever been to Manhattan?
Yes.
No.
Okay. San Francisco?
Yes.
Yes.
Boston?
Yes.
No.
Philadelphia? Chicago? The reason I mention all these cities, because if I ask you, who's got the biggest buildings in every one of those cities? It's insurance companies. So they're pretty adept at staying a step or two or 10 ahead of the consumers. And, this is why I get so much enjoyment out of sharing knowledge to help consumers, get what they pay for and make sure they're not overpaying, and make sure that, that hopefully that insurance is in place when they need it to be in place.
Sure. David, so one thing I would think about, if you're saying that the buildings are so large, and I'm going to put on a tinfoil hat for a brief second, and then I'll take it off. So my question is that there's so much conflicting information out there about, the poisoning in our soil, and our food is not natural, and our life expectancy is going to be cut in half. But you have research that's showing quite the opposite. So would you say that they're using a third-party proctor to put misinformation out there, so people, because your mind is so powerful. If I think I'm only going to live to 62, then I start checking out maybe at 61.
That's a great point, and that's what my friend, that's his whole mission, is to have people realize that you should be shifting into from second to third or third to fourth in your 60s, as opposed to downshifting, to put it in automotive terms. To address what you just said, I'm just not familiar. I mean, listen, there's always been and always will be scare information and scare tactics. But, and even though maybe in the last 2 or 3 or 4 years there's been a slight change in what I call mortality expectation or longevity expectation, and that's, I think, in large part due to the opioid crisis. You've had so many people, unfortunately, overdose and die, and it's just, it's a huge problem, enough to where it's slightly impacted the average mortality. But for people that are educated, people that have access to doctors, I would say today's average life expectancy for a female is in the mid-90s, and for a male in the late 80s, early 90s. Now, that would be based on if you were healthy at age 50 or 60. There's certainly, things that are going to affect that. But I'm saying in general for people that are educated and have access to good medical resources, the average life expectancy is way, way more than it was even 10 years ago, 20 years ago, 30 years ago. And that's why when I'm going to share some other, I think, startling statistics with you, it just becomes so important for your listeners and all consumers to be educated to the pitfalls of not having your coverage last as long as you do. But let me start sort of painting the picture of where we sit today, and part of the reason why all these big buildings are doing well. And let me step back a minute and let you know that I am a firm believer in life insurance, and I own life insurance on myself. It's just that it needs to be handled properly.
Okay.
Okay. So here's a question for you, because you did so well on the guess on the people over 100. I'll give you a chance to redeem yourself.
Give us a mulligan, please. Thank you.
Oh, I'm going to give you a double mulligan. Okay. What percentage of policies do you think lapse? In other words, they terminate for one of a number of reasons before maturity. Maturity being defined as death of the insured.
Terminate before? Oh, man. What percentage? Probably, I don't know, half. I'll just go with half.
Okay.
Yeah, I'd say it's a little higher just because you were talking about the projections and mortality expectation. I'd say 60.
Yeah, well, it's about 90%.
Wow.
90%. And by the way, that has nothing to do with these future mortality projections. These are policies that are currently lapsing like flies, So here's another startling statistic. I don't know how many of your listeners are seniors. That's the demographic I ordinarily work with. But here's a wild question. What is the dollar amount of policies owned by seniors that lapse annually every year? In other words, the death benefit amount.
It lapses. I'd still put it at that 90.
And I'll give you a hint. It's a big number.
Yeah. Well, okay, let's factor in dementia and Alzheimer's. So I forgot I had insurance. So, yeah, I'd put about 90.
90 what?
What about you, David? Oh, 90 what? Okay, that's good. 94.
94 what?
94 per.
This is a dollar amount, not a percentage. This is a dollar amount of policies.
Oh my goodness. That's why that's why they have the biggest buildings in the middle of the city.
Yeah. No, but what do you? I mean, it's a crazy dollar amount. Give me a dollar amount of face benefit that lapses.
150 million.
150 million.
Yeah.
All right. Let me give you a hint. It's in the billions.
Oh my god.
150 billion. How about that?
Well, that's a little high. Okay, you got me there.
All right. 50 billion.
70 billion.
70 billion.
That's with a capital B. 70 billion. Okay.
Wow.
Imagine if 25% of those policies, because I'm in the business of helping seniors monetize or sell their policies if they don't want them, they don't need them, they can't afford them, they're not performing as expected for a variety of reasons. There's the third-party market which we access. People like Warren Buffett, large hedge funds, institutional buyers are interested in buying these policies But imagine if even a small fraction of that $70 billion could be turned into money to help these seniors with their increased longevity expenses, with their health care expenses, with their legacy gifts they want to make, with the families they might want to leave money to. I mean, it's an amazing waste of money. Amazing waste of money.
Yeah. Now, I think you're speaking, when you talk about, I guess, the U.S., for the most part, you don't want to get pulled over, so you have to have car insurance. Like, there's no sense of urgency to get life insurance. And as we were talking before we recorded, I'm in a business group, and the gentleman there was talking about 40. So kind of walk us through the process of starting with term, and does that graduate to whole life? Or what would be an ideal scenario for our listeners and for me and David, just to be selfish?
Yeah, to quickly add to that, can you maybe explain the difference between term and whole life insurance?
Certainly. And I'm going to make it simple, because there are 3 or 4 types of what we call quote unquote permanent insurance, or policies which have the ability to be kept permanently if they're handled properly. So to make it simple, I'm just going to separate it into term and permanent, as opposed to the 3 or 4 types of permanent that exist.
Okay.
So it's all affordability. I get it when you're younger. On the other hand, I've seen too many instances where young people with like 2, 3, 4 children, and they don't have coverage, and they pass away, and it's a horrible void, of course, in the widow's or the husband's life, but there's monetary realities which could have been the risk could have been shifted, and this is where term insurance comes in. When you can't afford permanent insurance, what you can do is purchase term insurance which is convertible to a permanent product, because in my opinion, you always want something which you have the option of keeping permanently. And you want something which you're protecting against a change in your health. Most people are very healthy in their early 20s. I would recommend that people buy it maybe even before they get married. Maybe they're getting married in their early 20s. Then you start having children. And it's so inexpensive to start. And you can buy term policies that literally last 30 or 40 years, where they give you a stable price. They will charge you one flat price per year per $1,000 worth of coverage, and that price will not go up for the period of time. And then at the end of that period of time, again, check the fine print, get some expert advice, you have the ability to convert that to a permanent product. So in terms of sequence, that would be one recommendation that I would certainly make, because as I think we talked about it, what is your most valuable asset is your health and your earning potential. And you're going to spend a lot more money on car insurance and property insurance and, travel insurance and crazy things, and ignore this at your peril. I think it's too important to ignore.
One thing, David, I like about comedians is, they make us laugh, but they always have some little nugget of truth. And there was a comedian, T.K. Kirkland, and he was talking about those that were in gangs. So if they were gangbanging, he was saying that their parents should get insurance on them because they're in a high-risk employment, and the untimely demise, at least the family's taken care of. So, what is it?
not sure about the underwriting issues on that subset, but we'll leave that for another day. As well as the moral and ethical issues of wanting to potentially benefit from your child's demise.
Yes.
That's sort of the reverse of the normal course of family protection, right?
Exactly. But there was a recent Transamerica COI settlement, and you said it was a big win for insurance companies. So, and David and I, you blasted us out of the water just on our lack of knowledge for insurance policy lapsing and dollar amount owed by seniors. Could you talk about this settlement and what it means to the consumer?
Sure. It's another example, and again, there's a lot of very fine insurance companies. So I don't, and again, I'm a believer in life insurance as long as you're dealing, with reputable companies and companies that have a better track record of protecting their insureds. Transamerica, I felt, was very sort of out of bounds in significantly raising mortality costs. Now, an insurance policy, if you buy a permanent policy, try to make it very simple. There's three moving components to the performance of the policy. One is the amount of crediting that they're going to give you on the cash that you put in the policy, right? So one is a credit, some percentage of interest, or some investment component that you got on the policy. The other two are what we call debits or expenses. One is the mortality cost, which is the annual cost per thousand of insurance. And the third is, the company's expenses and administrative costs. And as you can imagine, as those things go up or down, it's going to impact the performance. And, either the policy will perform better, worse, never exactly the same as a projection because there's a lot of moving pieces. So mortality cost is a pretty big component to the performance of a policy. And as we've been discussing, mortality in general is gaining. Other than a little blip because of the opioid thing, it's gaining, and it will continue to gain because people are living longer. Okay. Mm-hmm. So if you think about it, if people are living longer, is that good for the insurance company or bad for the insurance company?
Bad.
No, it's good. If they're living longer.
Oh, because they get more pay, they get larger payments. Yeah.
They're taking in more premium and they're paying out later, right?
Yeah.
Okay. You'd think it would be good, but yet Transamerica had the opportunity because they wanted to make more profit. So they put this huge increase in for mortality costs. Mm. And that has in some instances, the cost went up 2, 3, 4, 5, 8 times what they were.
Mm-hmm. Wow. Okay.
Yeah, and so this is what's leading. It's one example. It's not by any means the only example, but one example of why so many policies are lapsing.
Mm-hmm.
So what happened was, there were some, you always get, pretty sharp attorneys circle around. They file a lawsuit, a class action suit, and I'm saying they did it with good intentions, that they want to, provide some protection for consumers, for insurers, and there's really a legal question as to how much can they raise the costs, and all these contracts are very, very, as you can imagine, difficult to interpret. They're pretty complicated, but they do have certain boundaries, and so they were within the boundaries because they have very high boundaries built in as to what they can raise the cost to. But generally, the issue is, can they just raise them indiscriminately, or because they feel like it, or can they raise them based on a bad experience. In other words, people, the class of people that are insured are dying much quicker than what was projected.
Mm-hmm.
And here we have the reverse. People are living longer. So you can see why there was a lawsuit. Is that clear, why there was a lawsuit?
It is, and I would also think about this week, right, with the Dow just plummeting, and just, when you're talking about the market where people sell these policies, that would also be impacted severely, wouldn't you think?
Well, I'll get to that. That's a great question. I'll get to the marketing and the reason why people buy them. But so go back to this lawsuit. So what really would have been a full recovery for the consumers would have been for the courts to say, hey guys, you can't raise the prices this much, give them a credit, and let them maintain their policies. That would have been a really big win for consumers. But yet, the courts didn't do that. The courts allowed a very modest recovery against the charges that had been put in for the policies, but did not prohibit the companies from continuing to charge those vastly increased mortality costs going forward.
You live in the wonderful world of Florida, and that state usually determines who the next president's going to be. And I don't, maybe because I'm not of that age, but I don't hear any candidates talking about that yet. And it seems like it will be a huge issue to decide who I'm going to choose for the next president.
You mean in terms of somebody protecting seniors? You mean?
Exactly.
Yeah, I saw it with my mother. It's a huge problem that you have quote unquote legitimate companies, and then you forget about all the scam companies that are out there, and they're just taking advantage of seniors, and it's pretty heartbreaking to see what goes on. But we can't cure every ill, but I feel good about being able to help seniors be able to get cash out of their policies or get good advice as to what they can do. All they need to do is go to my website, which is Life Insurance DR, not doctor, but dr.com, lifeinsurancedr.com. And there's a lot of information there as to how they can actually calculate the value of their policies by putting in a little bit of information. It's like a Geico calculator. Within a minute, you get a value as to what that policy may be worth to help those people that are out there. And even for your younger listeners, their parents may have policies, so this is certainly pertinent for all ages, to help them with getting cash, to help them with their expenses, to help them do the things they need to do, or to help them deal with problems like where you have these companies that are, I think, unfairly raising prices or not giving accurate information and contributing to this high ratio of lapsed policies versus policies which are meant to last until death, until maturity.
And I'm glad that we have someone like you as a senior advocate. We had a guest not too long ago, and she was talking about the opioid epidemic in the state of Florida and how, the doctors or just companies in general, they see that yellow brick road and they take advantage of the consumer, where you have these huge, which you would think wouldn't happen, but human nature, it just seems like it's a rush to the bottom when money's involved. So at least we have an advocate.
Too often it is, and it's sad. It really is sad. It means people that really are not necessarily able to protect themselves are being taken advantage of, and that's never a good thing.
Yeah, I kind of always wondered. I wanted to ask you, Dave. So how much do the insurance companies kind of count on people, the general public, and being ignorant to how everything works and maybe all the coverages that they need?
Oh, great question. I mean, of course, these guys all have very sharp actuaries and all this stuff. So I'm sure that in their pricing, they're building in, some of their past experience. And that's why some of the companies make it difficult for what we call life settlements. That life settlement is the sale of a policy to a third party that for, again, whatever reason, the person doesn't want to keep it, can't afford it, doesn't need it, it's not performing properly, they need the cash. They make it a little difficult for the people to get the information, to become aware of what they can do. But it is certainly something that people are well within their legal rights to do. There was a lawsuit back in 1906 which ruled that life insurance is the same as a stock certificate. It's the same as a house. It is a piece of property, and it is transferable to a third party. So the consumers and the children of the consumers that have these policies need to be aware that they have choices and that they need to educate themselves as to how to best navigate the market that's out there. And maybe it would be helpful if you want me to explain why there's a market out there and how it came about and the various ways that you can get to it. Would that be helpful?
Absolutely. Go for it.
Okay. So about 20 years ago, there was a very smart person in the industry, and at that point in time, the only choice that a policy owner had was to turn the policy back in to the insurance carrier that actually wrote the policy. Mm-hmm. And they would be limited in recovery to something called a cash surrender value. So in other words, whatever cash there was in the policy at that point, minus whatever surrender charges might exist or not exist at that point, would be the sum total that they could get. And this person said, wow, this is really unfair to the consumer in terms of not having a market to find out what's the real value of this policy. That is a very depressed number, what you're going to get, because most of these policies, at the same time that people are thinking that they might not want to keep them, usually have very minimal cash to them. Mm-hmm. So a market was developed where, and again, big institutional buyers, it's not recommended for the individual consumer who wants to buy a policy on grandma because he thinks she's going to not live or live, but people that have a lot of money and for the following economic factors decide that it's a good investment. So over these years, as interest rates have become lower and lower in terms of what's being offered in the savings account or what you're being able to get as an investment, people are looking for where can we put smart money. And if you think about a life insurance policy, what's the likelihood that someone's going to die?
Well, the likelihood that someone will eventually die is pretty good.
Yeah, pretty good, right?
Yeah.
100%, right?
100%, yeah.
Okay. And what you're getting better on these percentage questions now. What's the likelihood that the company will pay the death claim, assuming it's a highly rated company?
Right up there.
Yeah, it's 100%.
It's 100%.
Yeah, it's not like a health claim where they're going to fight you. If you're dead, you're dead. So if you got the policy, you can prove you got the policy, you're going to get paid on it. So from that standpoint, it's an attractive investment. What you don't know is how does the math work? Is it going to be profitable for me, or am I going to lose money on it? And that's where a rather sophisticated set of statistics and longevity reports and analyses of the policies has evolved to where the buyers have a fairly good idea or a guesstimate rather of how well the investment will perform. And when you're buying in large numbers, you can afford to have, you're right on some, you're wrong on some, but you've got two components out of the three that are definite. The insured is going to die, and the company will pay off if the policy is enforced when they die. And so, as a result of this, business was started about 20 years ago, become a very large business. I think about $30 billion a year in transactions annually. And, there's a lot of, it's very consumer friendly. I think in 40 out of the 50 states in the country, it's monitored by the states. They're in favor of it. They're all in favor of it, but there are rules and regulations that have to be followed. So it's very consumer friendly, and you're doing something to eliminate this tremendous waste of these lapsed policies that lapse with no value. Now, at the point where a person might want to say, gee, I'd like to investigate what is my policy worth, in my opinion, and it's not just self-serving because I am a broker, but I think if you don't take the policy to the entire market, in other words, let's say there's sort of like a liquor license. In most states, there's maybe 20 liquor licenses or 20 portals you can go through, companies that have to get registered and stay compliant, but there may be 100 buyers going through those 20 portals, right?
Right.
And in order to get the highest and the best value to the policy, it's just common sense that you want to be able to shop it to the widest audience to try to get the most people interested, to try to get the best price for the policy. And today, there's 3 or 4 very major companies spending millions of dollars per month advertising. They can, quote unquote, help the owner of the policy sell their policy. But it's sort of like going down into a little path where they're not going to get the full market exposure. The buyer is going to pay the least price they can pay because the people aren't going to be aware that they might have much higher value. You know what I'm getting? You know what I'm saying?
Yeah.
So we put a calculator into our website, and we actually on our website we show how the calculator values the policies, and when you run them against the other calculators, we're generally 25 to 50% higher on the values we feel we can get for the seller versus some of these other companies that are shopping a very limited marketplace or solely working on behalf of a unitary buyer. One buyer is buying it, they're advertising to get these policies, but they're going to lowball it. They're going to pay the minimum they can.
Let me, as you were talking, it made me think of the shock jocks in the 90s when they were talking about life expectancy for certain celebrities, and it sounds like this has been legitimized in this marketplace. Yeah. Right. But let me ask you with this marketplace, as you were saying, as in an ideal scenario, we use the worst case scenario if I'm a gangbanger, right? But let's put it at the other end. I waited until I was 70 to get life insurance. Like, what percentage in the marketplace are those that were late in getting life insurance versus those that got it earlier in life?
I think that people generally buy life insurance. People that are buying life insurance a lot of times are multiple buyers. They'll buy a policy, then they'll say, oh, it's not working well, I'll buy a different policy, or my needs have changed or whatever. So I would say that the older you get, the more expensive it becomes. But on the other hand, depending on what your life expectancy may be, your family is going to be collecting on it sooner than somebody that buys it at an earlier age. So it's it really takes an individual consultation to discuss with the prospective buyer what are your needs, what are your preferences, why are you buying it. Are you buying it to satisfy a charitable bequest? Are you buying it for your family? Are you buying it for spousal income? You just really have to get into those. Are you buying it for estate taxes? You have to get into those types of questions and then devise the best product to meet the needs the best way.
And we were talking about health, too. Is it higher because the health dwindles? Or, there's some people that, I'm going to get my act together, but I'm like 68 years old and I'm finally going to eat broccoli. So does that factor into that cost?
Well, I think it's just that if you're 68, your life expectancy, which is what the pricing is going to be based on, is going to be many less years than if you were 48. You could be very healthy at You could be very healthy at 68, and it could still be a very good acquisition. It's not an invest. I hesitate to call it an investment. Again, I call it really shifting the risk. And there's so many reasons why you might buy life insurance. If you're a business owner and you had 3 or 4 kids, and you had 2 of them in the business and 2 of them out of the business, I can tell you from experience, you're really better off not having owners in the business that are not participating in running the business. So, there's so many reasons why insurance makes sense, but really the whole crucial question is having expert advice as to what you're buying and how to maintain it so that it doesn't fall into that category of 90% lapses.
Well, you talked about the business owner, and unfortunately this week Miley Cyrus broke up with her life partner. How often do you have someone trying to turn in that policy, but it was the first wife, and they're already on, the male's already on to the second or third wife? How often does that happen?
Maybe Miley will write a song about it. I don't know. The owner, that would really, it's a funny question, but it would really depend on who owns the policy. If, for example, Miley owned the policy on him, could she keep it? Is there going to be some kind of settlement? I don't know. You have a lot of questions there.
Sure. It just brings some levity to it because, we're talking about something that some families don't talk about until it's too late. And, it's something that should be covered. And what's the best way to approach family members if they aren't talking about it, but they factor, like you said, you could be 20 and get life insurance. But let's just say they're in the 60, 70-year range and they don't have life insurance. What's the best way to educate them?
Well, you mean if you're a family member or if you're an insurance?
Yeah, if you're not, well, if you're a family member that has the insurance, well, here's a guy right here. He's standing right behind me. So as a family member.
What's that?
If it was a family member to talk to an insurance agent.
Well, no, but are you saying if you're the child of somebody that maybe should have insurance, but you don't know if they have it or not?
I work with a home care business, and I hear these scenarios all the time. And like you said, you're in Florida, so I'm sure you hear it a lot more than I do. But it is something that if it's not once off or once in a blue moon, it's a regular conversation that us in the sandwich generation are having or need to have with older family members.
Well, I think you absolutely do, and I think it's a conversation that can be brought up in a nice way, which is really protective of both sides of the equation. Is you don't want to pry, but you want to maybe so maybe an entree point is, I just heard something interesting, and there's so much waste in life insurance policies that lapse, and there's opportunities to actually get money for these policies. I just wanted to make you aware of it because I don't know what your situation is with it, if you ever felt you can't afford it, or if you have it, or why'd you buy it. It opens up the dialogue because those people that are in the middle, you care about, the elder generation living out their lives gracefully and not wasting assets. And so that's why it's pertinent to bring it up, I think, as the middle generation. Does that make sense?
No, it makes total sense, and it would be good for us just to kind of send that out, even this podcast out, because having a senior advocate, and even on your site where you have the value calculator, they're more educated into the marketplace.
I think you're totally right. I think this is a huge message for everybody. And I think that everybody would be better off being educated to the possibilities and to the current realities as to what's happening. Because, again, I was brought up to abhor waste. I'm part of that generation, so my parents were Depression babies and, eat all your food on your plate because somebody's starving in Asia or whatever it was. Mm-hmm. So, and there was a keen sense of appreciation for saving and for not wasting. And so that's the ethos that I was brought up in, and it's just, I felt very good, very passionate and very good about being involved in trying to help people avoid waste and turn waste into something positive.
Since you were also talking about the projected 3.5 million population in the future, do you also partner with overall or alternative health agencies? Like, now that you have your insurance in order, you thought you were going to die at 75 and hold on to your seat. You're going to be there another 30 years or so. What should you do to change that? Do you work with other people to point people in that direction?
Yeah, as a matter of fact, like I say, a friend of mine that I've recently become much more aware of what he's doing, I think he would be a great speaker for your podcast. And I'm happy to make the connection for you guys. And he could speak directly to the topic of what his messages are for alternative thinking and alternative lifestyles to become part of that 3.5 million people, right, that are in the future.
Yeah.
Sign me up. Yeah, if I could be healthy, why not? So if that's of interest to you, I'm happy to make that connection for you.
It would be, because I'm thinking that people would say, well, I'm 75 and I'm at the end of my rope. Why would I want to live to 100 where I think I'm ready to go now?
No, I think it's a very important message to get out there. I think it's a very important message, yeah.
Awesome. So again, just to kind of recap, first of all, thank you for clearing up that there's more than 300 people over 100 years old.
Are you living in that gangbanger neighborhood?
Yeah, grandmas and guns, man, I'm telling you.
Yeah.
So yeah, you gave us the whole gamut of the insurance business with regards to life insurance, how we can, as you said, shift the risk and become better consumers in the marketplace. I learned a lot for sure.
Good.
Yeah.
And I appreciate you being able to help spread that message, because I think so. How do you do that? What if you said send the podcast out? What is entailed with that?
Yeah, so I know, I'll let David answer on his behalf, but I'm in the business community, so I do some marketing with folks across the country. And like I said, I know a lot of healthcare or home health, or just under the health umbrella, they deal with the aging population. And the United States, we are continuing to grow older as a country. And not to be political, but, if there's been some talks recently about if people are being deported, then who's going to take care of us when we get older? So there's a lot with baby boomers that they're concerned about. And so this podcast could be one reason to get that message out.
Good.
Mm-hmm. And also, in addition to the podcast, you also have your book that we didn't highlight, which is the best kept money secret in your insurance policy. Would you like to talk a little bit about that and how people can get that book?
Sure. And I wrote a second book, which you might get a kick out of also. It's called Common Sense is Not That Common.
Oh, perfect.
which really has a lot of good advice and values to live by. Both of those books are available free as a download on my website. Wow. So they're both, I wrote them as a labor of love. The one was sort of more of a personal history and wanting to share a lot of the experience that I got, the things I learned working with my dad and working in business. And as he used to like to say, and everybody sort of likes this one, good judgment comes from experience. Unfortunately, experience comes through bad judgment. Mm-hmm. So, the cheap way to benefit from that is to try to benefit from somebody else's experience and utilize the wisdom that hopefully gets developed over time through making mistakes. There's nothing wrong with making mistakes. I mean, I make mistakes every day. If you're not making mistakes, you're not doing enough. And but and the other book is really sort of, I don't know, expose might be too strong a word, but as an educational tool and a lot of stories and a lot of, I think, information for the layperson as well as the professional as to what we can do to combat this tremendous amount of waste on life insurance policies. And again, if they go to my website, lifeinsurancedr.com, and you scroll through there, they're both there. They're on one of the pages, and all you got to do is click a button and put your email address in, and you get a free download. I wrote them not to sell them and make a profit selling them, but really more to provide the information. So for me, that's the easiest way to provide that information for the public.
Sure. And lastly, I also noticed on your site that you do speaking engagements as well. Is that limited to the Florida community, or are you speaking nationally?
Well, no, I speak nationally. I mean, I've been speaking for years at a very high-end CPA conference that goes on every year called Winning is Everything. I spoken at industry things for the insurance industry, spoken at charitable venues, because a lot of times these policies can be used to fulfill charitable bequests. Charities themselves don't want to take on policies because they don't have the internal expertise, and they're concerned about the policies lapsing, but it's much simpler for the policy owner that wants to make a donation to the charity to sell that policy and then give them cash. They all like cash.
Cash is king.
Cash is king, and they can all use cash, and you eliminate the evaluation costs. So it's a much more beneficial, streamlined process for both the policy owner and the charity in that venue.
Awesome. I learned so much. My goodness, I'm even going to listen to this a couple of times just so I can become more versed. And I might edit out that I only knew about 300 people over 100 years old.
You guys got the pencil, as they say on the golf course.
Exactly. Well, you have been in tune to another episode of Intrinsic Motivation from a Homie's Perspective. This is Hamza.
And I am David.
David, it was a pleasure, and I'd love to speak with you further and stay in touch with you so we can learn more about shifting our risk.
Absolutely, and then send me something, and I'll send you the contact information for this gentleman, Mark Pace. And of course, I'd love to get it a downloaded copy of the podcast or whatever.
Yeah, absolutely. Yep.
Oh, great. Well, it's been a lot of fun, guys. I think you asked a lot of great questions, and hopefully it's helpful for both you and your audience.
Absolutely.
Thanks for being
really enjoyed. Thanks, David.
Have a great day. Thank you.
All right, you too.
Thanks again for checking out another episode of Intrinsic Motivation from a Homie's Perspective podcast. Please check us out on our website at intrinsicmotivation.life, where you can click on the Speak Pipe button and leave any suggestions for future podcasts that you'd like us to cover. Also, check us out on our social media sites. We have a YouTube channel, Facebook page, iTunes podcast, in addition to Stitcher and Google Play, all under Intrinsic Motivation from a Homie's Perspective. Check you out next time. Have a great day.